Hi, I'm Virata here from CSI PROP. So today I've got Chris Gray here, author of the Effortless Empire and also a host on Sky News. So Chris, maybe tell us a bit about yourself.
Yeah, sure. So I originally came from the UK, so I'm an accountant, so I've worked with numbers. But I started investing at the age of 22. I worked out that a 3-bedroom house was cheaper than a 1-bedroom unit because I could rent 2 rooms out to 2 friends and live for free. And I carried on investing, managed to retire from full-time work at the age of 31 in Australia at Deloitte. And then people said, how come you drive fast cars, you live on the beach and you don't work? So I started telling them my story. And because I didn't sell anything, I had no vested interest in pushing them down a certain path.
Yes.
So everyone trusted what I said. And then I started getting onto TV because I had nothing to do during the day, so I was doing extras. And so now I've been hosting my own show for about 10 years on Sky News. And I guess people then said, look, can you do it for me? So we started teaching them. And so we set up what we call a buyer's agency in Australia. So I effectively buy them investments that I'd buy for myself. So if it's good enough for me, it's good enough for the clients. So yeah, just a different way of working.
So you're saying you started off in the property market from the media side?
Yeah, so effectively what I did was I started buying, so I was doing a normal accounting job at 22, but I then wanted to live in my own home.
Yes.
And that's when I started working in the numbers, and the numbers, I couldn't afford a 1-bedroom flat because it was too expensive.
Okay.
But I could afford a 3-bedroom place, so it's 7 times my income versus 3 times. But because the rents were about 11 or 12% in the UK in, say, in the early 90s, renting 2 rooms out paid for the whole mortgage. So that was the mathematical thing, is people thought I can't afford a 3-bedroom house, but actually I could because I had 2 people paying for the rooms.
Huh.
And so just that kind of logic worked with me.
Okay.
And so I guess my skill base as an investor has been, rather than just do what everyone else does, I buy a home, spend 25 years paying it off, I just look at the mathematics, and the mathematics tell me to do something completely different. So I've got about 14 properties, roughly worth 15-16 million Australian dollars, but I still don't live in my own home. So even though I've got a wife and kids at 8 and 10, because mathematically I worked out is, like Monopoly, if I buy lots of little apartments, like 2-bedroom apartments in Australia, the rental yield is anywhere from 3 to 5%.
Yep.
Whereas if you want to rent a $5 or $10 million home, the yield's 1 or 2%. So effectively the learning is whatever you can afford to buy, you can rent somewhere 3 times more expensive for the same money. So in Australia we call it rent vesting.
Rent vesting?
Yeah. So rent where you want to live, and rent money's only dead money if you don't invest the equivalent somewhere else. So that's where the vesting comes from. So I'm probably the most famous rent vestor in Australia because most people are embarrassed renting. They think poor people rent.
Yeah.
Whereas I'm proud to say I love renting because it's a third of the price. So I save 200 or 300 grand every year because I'm renting rather than paying a mortgage at 5, 6 or 7%.
Interesting. I think a lot of Malaysians can definitely learn from that because we definitely can't rent our properties very well over here.
Yeah.
So it's a lot cheaper to rent than to probably live in your own home.
Yeah, and so a lot of people then say, oh, but you could get kicked out. But in reality, a lot of the time you don't get kicked out. And we've been in our current place in Sydney for about 6 or 7 years. So again, in the book, The Effortless Empire, a lot of the things about investing, it's all about mentality. So whether you invest in Malaysia or the UK or USA or Australia, the thought process behind it is the same. And you just need to work out the current yields and capital growth to work out if it's going to work for you in that environment.
So, there's been a lot of talk, Chris, of people saying, of course, there are more millionaires made through property investment than anything else. What's your take on that?
Yeah, so look, I've certainly been successful and lots of our clients are successful on property, and I think the main thing about property is it's easy for everyone to understand. Everyone lives in one. Whereas to go and put $1 million into shares where you know nothing about, it's hard. And especially when you're borrowing money from the bank. Like in Australia, typically we borrow at 80%. I'm not sure how much people borrow in Malaysia. So if you got $1 million down and you're buying $5 million worth of property and you've borrowed $4 million, that's a lot of debt, that's a lot of risk. But the banks are happy to lend it on property because it's, especially residential property, it's seen as pretty risk-free.
Yes.
And as long as you've got the cash flow to service, And again, my book goes into that is build up a buffer zone. So extra cash, so that if you lose your job, you lose your tenant, you get sick, interest rates go up, you've still got the cash to hold on to it, so you're not forced to sell.
Okay. Huh. So what's your take on the Australian property market right now?
Sure.
Yeah.
So look, I think the market's fine. I don't think it's that bad. But the media, probably the one thing I teach is don't listen to the media. so even though I've got my own show and I write to the newspapers and the radio, I say don't listen to any of it.
Yes.
Because it's all biased advice. They're trying to sell newspapers, they're trying to sensationalise the headlines.
Yes.
So it's very hard to read into it. So look, there are some areas in Australia that are going to be in trouble, and the market might come down 10 or 20 or 30%. But there's a lot of areas, especially if you're buying median price property, like average price property, in good areas, then generally the market's still pretty strong. And again, as I'm investing for 10, 20 or 30 years, I'm not investing for 1 year to then try and sell it and make some growth and get out. So the more you try and speculate, the more you try and make more money quickly, get rich quick, the more you're going to lose it.
Absolutely. No, I think real estate's always going to be patient.
It's got to be a long term.
Yes.
Yeah.
Any last tips for people coming up trying to buy their first property or their first investment property or so on?
Sure. Look, my tips are always, it's all about the numbers. So try and remove the emotions. Just because your parents have done something or society does it a certain way doesn't mean that that's necessarily correct for you. So concentrate on the numbers and see what the numbers are telling you. And again, go and get some professional advice. Go and speak to accountants and mortgage brokers and financial planners. But don't go to the poor ones. You need to go to ones that are successful, that are doing stuff.
Yes.
So I remember my dad telling me he would never buy anything off anyone that drove a BMW, because he said they're overpaid. They're obviously paid too much money. And so they go and buy something off someone that's got a crappy little car.
Yes.
But the mentality is these days is you've got to pay money to make money. Like there's a limit to how much you can save. So you're much better at buying something off someone that's successful, that are making lots of money from property, than the person that's not. So how many advisors actually follow their own advice?
No, absolutely. I think that's essentially what we tell all the clients, is get good advice.
Yeah.
If we could do just some education, help them with something, that would be great. But I think often you're right, most people sometimes just tick.
And are they doing the thing? Because again, you were saying earlier on that you buy the same kind of projects that your clients buy.
Yes.
Again, we do the same. I'd only buy a property for a client if I buy it myself. And that gives you the confidence that I'm making my money. Sure, I've got a business, but most of my money is from the properties that I buy that are the same as the client properties.
Yes.
That's the biggest thing.
So,
and again, if they want the book as well, you can get it for free, so we don't even charge for the books. Just Google Chris Gray or just yourempire.com.au.
Excellent. Thank you so much, Chris.
No, my pleasure. Thanks for hosting me in Malaysia.
Absolutely. Hopefully we'll get you in TV somewhere today.